While Saudi Arabia's energy minister was making headlines in Vienna, the country's sovereign wealth fund was also issuing its debut green bonds. It raised a total of $3 billion. Simone Foxman has more on this. So, Simone, the issuance got quite a bit of interest from around the world.
Yeah, some $18 billion of bids coming in for that $3 billion of issuance, and that really pushed yields on all three tranches of those bonds well below the initial guidance. In fact, the 10-year bond yielding about 60 basis points more than what Saudi government issuance is for the similar period. We have a GTV Go, which kind of shows you what's happened. You know, this says a couple things to me. One, it says demand's still strong for Gulf bonds, for Saudi bonds, despite falling bond prices. Two, it says any investor angst about a green bond issuance by Saudi Arabia, given it's the world's largest oil producer, may be overplayed, not necessarily material to its ability to go and issue these green bonds in the market. Also, Century Bond, that was a new milestone for the ESG. And, you know, I wonder as well if this doesn't start to open up green bond sales across the region. We've seen Qatar flirt with the idea. We've seen some other sovereigns do so. So we could potentially see other countries and other companies come to the market out in the wake of this sale.
And then some of the world's major LNG producers are raising the alarm about tight markets for the fuel in years to come. Their latest commentary, what stood out to you?
Yeah, a bunch of them speaking at an event in London sponsored by Energy Intelligence this week. All of them talking about supply next winter. Not saying that this year is the concern, but next year down the road, that's what everyone's going to be concerned about. Saad Sherid Al-Kabi, the CEO of Qatar Energy, one of the folks who made such comments. He also said that the market will be structurally short of LNG supply until a lot of new capacity comes on the market come 2026. Also interesting to me were comments by the CEO of TES. That's a company that's building the LNG import terminals, hydrogen import terminals in Germany. He really called on European leaders to stick together. Otherwise, there would be a threat for natural gas supplies across Europe. He also was concerned about next year's supplies of LNG. He said, we're at the beginning of something that's looking, unfortunately, worse than expected in the medium term.
Right. And then briefly, fuel prices are also a problem in Tunisia. The country's central bank surprised markets when it hiked rates yesterday. What's the context?
Yeah, first monetary policy decision since June when it decided to hold rates steady. Really a response to the highest inflation in 30 years, 9.1% year on year in September. We've seen a lot of concern from the markets about Tunisia's fiscal position. Moody's putting the country on watch for a downgrade last week. And this decision by the central bank may not help it in its efforts to get that IMF loan, very crucial to its long-term stability.